Thanks for downloading the Budget Tracker. If you're watching this video, you've already taken the first step towards taking control of your finances. Congratulations! This video will serve as a tutorial to help you understand how to use the spreadsheet. Without further ado, let's jump right in and I'll show you how to do it. The very first thing you want to do when you download and open up the Budget Tracker is you'll want to go up to this File button and you're going to want to save your own copy because the copy that you downloaded is a master copy that you can't edit. So you need to download a version that you can edit. If you're planning to use Google Sheets, just go to File, and then you'll see a button right here that says Make a Copy. You'll be able to click on that one and save a copy to your Google Drive. This is just a demo account, so I can't click on it right now, but you'll see that button available for you. Or if you're planning to use it in Excel, same thing, go to File, and then instead go to Download and download it as a Microsoft Excel document. That way you'll have your own copy that you can edit. The first page that you'll see is the master page here. This page populates automatically from the other sheets in the spreadsheet, so you don't actually need to edit any of this information for now. We'll come back to it later and talk about it. The next tab over is going to be the balance sheet. Now, this is the only sheet in this Excel book that doesn't connect dynamically to other sheets. Basically, you're just going to enter all of this information manually. If you're not familiar with the balance sheet, this is where you want to calculate your net worth. And you'll start by listing your assets. So maybe you have a home and the market value of that house is $500,000. You'll put it in right here on the asset column. Maybe you also have a savings account. And within that savings account, let's say that you have $10,000. You'll just go right down the list here, filling out everything that's an asset and adding its value. And then you'll come over to the liabilities column. So maybe for liabilities, you have a mortgage on your home, and that mortgage is $300,000. We want to enter that in as a liability here. Oops. Mortgage, and then the amount, $300,000. You can continue to do the same thing for every other source of debt that you have. So maybe in this example, you have another form of debt that's $15,000, you enter it in. Okay, once you have all of your assets and then all of your liabilities, you'll want to come over here to this blue section, and you'll notice that it populated automatically. So you can see the total value of your assets, which is $510,000, the total value of your liabilities, and then if you calculate the difference between those two numbers, that equals your net worth. So in this example, this person would have a net worth of $195,000. Let's move over to the Goals tab. This tab is basically goals, things that you're saving money for currently. So I filled out a couple as an example. You'll start in this column and just enter in the name of your goal. So right here we have 3 listed: a new couch, a vacation, and a car. Under this timeline column, you'll want to fill out when you plan on achieving this goal. So for the new couch, you want to buy a new couch in 6 months. But this timeline here is in years, so I put in 0.5 for half a year from now. Maybe you have an annual vacation that you go on, and that's happening 1 year from now, so you'll enter in 1 year. And maybe you're planning to replace your car in 3 years, so you'll enter in 3 years here. The next column is the total cost of each of these goals. So maybe the couch is $500, the vacation is $3,000, and the car is $15,000. Anything that's in gray in the spreadsheet means that it populates automatically using a formula. So you don't need to edit it unless you know a little bit of Excel and you want to change the formula to your needs. What we're doing here is we're taking the total amount of time to reach our goal, and then we're dividing by the total cost to find how much we need to save per month. So $500 divided by half a year, which is also 6 months, would be $83 per month that we need to save from now until the time that we're planning to buy the couch. You can also see a summary of all of the goals combined. So in order to buy the couch, go on the vacation, and purchase the car, you need to save $18,500. Right here, you'll notice this box is white. So you want to edit any boxes that are in white. And this is going to be a manual entry of how much money you've already saved towards your goal. So maybe you already have $5,000. You have enough that you could buy the couch and the vacation, but you're still working on the car. These grayed out cells will calculate the difference of how much you still need to save and then break it into a monthly amount for you right down here. If you look over here at the savings goal, this will show you how much money you've saved in green compared to how much money you still need to save in red. Okay, let's go back to the master tab for a second. If you look at the master tab, you'll notice there's a blue section here related to goals. And we can see our 3 goals populated automatically: the couch, the vacation, and the car, along with the dollar amount that we need to save per month to reach all of those goals. Comes out to be a nice round number of $750 per month. Now that we understand the goals section, let's look at the income. The income is going to be here in green on the master sheet, and let's click over to these 2 green tabs down below, which are labeled W-2 income and 1099 income. Let's start with W-2 income. This would be, for example, a job where you have a salary would be a W-2 job, and this is where you would want to input the information. So let's say you're budgeting for your family, and maybe the first person in your family makes $150,000 per year. So you'll just type that in as the annual salary here. You want to manually enter that number. This is a formula that will divide that number by 12 to determine how much income you're getting per month. In this example, $12,500. I've also included a formula for FICA tax. This is another name for it is Social Security and Medicare tax. And this is actually automatically deducted from your paycheck, so it never reaches your bank account. Down here, we see the net income. This is going to be the number that you actually see hitting your bank account from each monthly payment that you get from your job. Now, you might have some other contributions as well. Maybe you have a 401k or a health savings account or some other expense that's coming off of your paycheck before it hits your bank account. If that's the case, no problem. Just enter those numbers here so that your net income matches how much money hits your bank account each month. Okay, moving on to the second spouse. Maybe they have an income of $65,000 at their job, and they can just go through the exact same thing to enter their numbers. Down here at the bottom, this will show the total net income. So if you were to add the income from salary 1 and salary 2, you'll get this final number, and that should be the same number as what hits your bank account every month. Let's transition over to 1099 income. Now, 1099 income is taxed differently than W-2 income, which is why it has its own tab in the spreadsheet. An example of this could be if you're a small business owner or if you have a side hustle. That would most likely be 1099 income. With 1099 income, it could be a commission-based job where your money is going to change every month. You're not always making the same amount. That's why it's broken down into the 12 months of the year here. And you can enter your actual numbers for each month of how much you're making. Once you enter the numbers here in the income column, then you'll see the average monthly earnings are calculated for you down below. Now, with 1099 income, you don't have tax that's automatically withheld from that income, but you do want to account for the taxes you're going to be paying on that income. Right here will be a tax rate to deduct taxes and basically calculate your net earnings from that 1099 income. Now, you might be wondering, how do I know what my tax rate is? And that's a great question. If you have a W-2 job and a 1099 job, then what you want to do here is calculate your marginal tax bracket. And you can look up those numbers on the IRS website, or you can use a link right here that I've included in the spreadsheet. If you click on this, it will take you to a website that calculates your marginal tax bracket for you. Just note that this link is actually from 2022, so it's a couple years outdated and it might not be perfectly accurate, but it can give you a rough estimate for now. Now let's suppose that you don't have any W-2 income. Maybe you just work a commission-based job and your only form of income is 1099. In that case, you actually don't want to use your marginal tax bracket. You want to use your average tax rate to enter here in this box. You can go to the same link here to find your average tax rate. Your average tax rate will always be a little bit lower than your marginal tax rate. So you can kind of check yourself to make sure it's accurate. Okay, once you've calculated your tax rate, you should get a number for net monthly earnings. And then maybe your spouse also has some sort of side hustle. Maybe your spouse, they get money from their siblings every month because they pay for the family HBO Max, Disney Plus, and Netflix subscriptions. So they just enter that income here and it's the same every month, a little simpler for them to calculate. Down here in the bottom, you'll see your total net earnings from 1099 income. Now that we've covered the two income tabs, let's go back and see what that looks like on the master spreadsheet. If we click on the master tab here, you'll notice this first line of W-2 income automatically populated. And then right below it, you can see the 1099 income. Now you know what your total monthly income is. This number is net income because we already accounted for some taxes. However, we didn't account for income taxes, so just make sure that you account for that in your personal numbers. Or if we go back to the W-2 income tab, right here we have a FICA tax deduction. Under deduction number 4, other, you could put income taxes there as well. And that probably shows up on your pay stub. Okay, back to the master tab. Okay, so you have your total monthly income. This number should represent the number that's hitting your bank account every month. So you can check to make sure it's accurate. Let's move on to all of our expenses. And we're going to break it into 4 main categories: debt, fixed expenses, variable expenses, and yearly expenses. Let's look at debt first. Right here, if we click over to the tab that's labeled debt payments, it brings up these cells. Now, this is basically just to help you keep track of all your different debts. Right here on the left, you can put what it's for. So in this example, I have a mortgage, student loans, Toyota, and American Express. You can label the type of debt: housing, education, auto, and consumer. And then you also want to enter the total balance that you owe. In the next column, you'll enter the interest rate on your debt, and in the following column, your monthly payments. You can also input the due date, what sort of payment method you use, whether it's on auto pay, and then any other notes that you might have. Something to notice on this spreadsheet: see these 3 little lines? These are actually filters. So let's just say maybe you had 10 different sources of debt and you wanted to be able to look at it more clearly. And you want to look at them based on how much of a balance each of them have. Right here, we could go up to the filter and we can sort it. And you can see now that all of your debts are sorted by the total amount owed. So for example, if you're using the debt snowball method to pay off your debts, this could be really valuable to help you see what the smallest debt is and start with that one. Or maybe you're using the debt avalanche method to pay off your debts, and you want to pay off the highest interest rate debt first. You could do the same thing and sort by the interest rate column. And here we see that the American Express debt has the highest interest rate, and it also has the lowest balance. So regardless of which method you're using, that's probably the debt you're going to focus on paying off first. If you look down at the bottom, you'll see the totals here in gray. This is the total amount that you owe for all of your sources of debt. And it should match the liabilities column in your balance sheet. So if we click back over to the balance sheet, right here we have liabilities. This one says $315,000. And if we go back over to our debt payments, this one says $380,000. So it indicates that maybe we forgot to list something on the liabilities column, which makes sense because we didn't put all 4 of these there. Right here, you'll see your monthly payment. So this is the amount that you owe as a minimum to pay each month to service your debts. If you were debt-free, you could expect this amount of cash flow to come back into your pocket every month. Let's go back to the Master tab. Right here, you can see under expenses in red, there are monthly amount for debt auto-populated, $3,250. Now that we've covered debt, let's look at the next category, which is monthly fixed expenses. And I want to clarify something here. Usually when people talk about fixed expenses, they mean things like mortgage or utility payments, things that you can't really just cut out of your budget. I've actually organized it a little bit differently in this spreadsheet, where I'm labeling fixed expenses as anything that costs the same amount of money each month. And you'll see what I mean when you look at this monthly fixed expenses tab. I've got health insurance, Netflix, gym membership, Uber Eats, Disney Plus, and a tennis club. Now, clearly, some of these would be relatively simple to cancel. But because they cost the same amount of money every month, I'm putting them here in this tab. And that way I'm not having to enter the same information over and over again, month to month. If you look down here, scrolling to the bottom, you'll see the monthly total, which is the sum of this column of all of the monthly payments. And then like we did on the last one, you can always sort these based on how much each thing costs or any other category that you want to. Okay, let's go back to the master sheet. And if we look at the master sheet, the fixed expenses have also populated automatically, $825. Next, let's look at monthly variable expenses. And when I say monthly variable expenses, I'm referring to anything that changes in cost from month to month. So for example, groceries, restaurants, clothes, entertainment, and then gas bills and electric bills. Those are probably going to be a slightly different amount every month. And you'll see that this spreadsheet for variable expenses is set up very differently than the spreadsheet that we just looked at for fixed expenses, where you just enter it once and you don't ever have to worry about it again because it's already listed month to month. With variable expenses, we're actually going to track them to see how they change over time. So for example, maybe in January, you spend $700 on groceries, but then in February, you spend $800. If you look at this column in gray, you'll notice that the average updated to $750 per month. This helps you really see how much things are costing, because depending on whether you make your grocery trip on the 30th of the month or the 1st of the month, it could be a big swing in this number. But after you calculate a couple months worth of data, you'll have a pretty good average to go off of. Same thing for things like gas bills that tend to be really high in the wintertime if you have a gas furnace, and then really low in the summertime if electricity is your form of air conditioning. Let's scroll down to the bottom here. This first number is going to be your monthly average. So as you input more data, this number will get more and more accurate for you. And then to the right of that will be the total for each month. So 1525 is the total for January, and 800 is the total for February. Now these numbers will update dynamically as you add more information into the spreadsheet. So maybe I spend $200 in entertainment in March. You'll see that the average went down, or I guess the average went up to 175. And then same thing here, you'll notice that it's included in the total for March. Now that we've entered our monthly variable expenses, let's go back to the master tab and see what that looks like. Down here in red, you'll notice monthly variable expenses, $1,600. And the number that it's pulling for this is going to be the number that's the average. So right here, $1,600, that's the number that populates automatically into that master tab. We've got one category of expenses left, And this is the category that everybody forgets to plan for. And I call it in this spreadsheet the yearly expenses, but you could also think of it as irregular expenses, things that don't happen every month, but you definitely want to plan for them. A couple examples could be homeowners insurance that you might pay annually, car insurance that you pay annually, birthdays that you celebrate once a year, Christmas, or maybe 1 to 2 friends get married every summer and you want to make sure you plan for that too. Just like any of the other spreadsheet tabs, you can filter it by whichever category you want. And especially nice in this sheet here is that you can actually filter it by the date that these expenses are going to happen so that you can plan for those large irregular expenses as they crop up. If we sort it by the date, maybe we have car insurance in February, home insurance in June, and a birthday in October. We can quickly find which month each of these expenses are occurring and transfer more money into our checking account if we need to cover them. You can also track what payment method you're using. So maybe you have a Discover credit card that you use for car insurance and American Express that you use for home insurance. Over here to the right, you'll see the total amount. This is going to represent the total cost of all of these annual expenses, so the sum of this column that I'm highlighting here. And then you'll also see the monthly amount. This is going to be how much you need to save on a monthly basis to plan for these big things. So knowing that I have all of these big expenses in the year, starting in January, I would want to save $558 extra per month to cover each of these expenses as they come up during the year. Okay, let's go back to the master tab one more time. We've finished inputting all of our information and we've got a nice summary. In green, we have our sources of income. In blue, we have our goals, the big things that we're saving for. And in red, we have all of our expenses, debt payments, regular recurring expenses, variable expenses, and annual expenses. Right here, you'll see the total amount of your expenses, and then see this area right here in gray where it says net balance. This is going to be the difference between your income and your expenses. This family is doing quite well in this example. They've got almost $17,000 per month of income. Their expenses are $6,000. Their goals are $750. So they actually have almost a $10,000 surplus that maybe they're investing towards retirement or other long-term goals that they have. If we look here to the right, you'll see a monthly expenses breakdown. Blue is for your debt payments. Red is for those recurring expenses. Yellow is for variable expenses, and then green is for annual expenses. This can give you some useful data to analyze how you're doing as a family. Looking at this example, if 52% of your expenses are going towards debt payment, you know it's a priority to pay off those debts. I hope you found this tutorial video of the budget tracker helpful. You've already taken the first step towards really taking control of your finances and seeing great financial progress. If you want to accelerate that financial progress, you're also welcome to book a free call with me. We can review your budget tracker together, and I'll share with you some insights on where I think you could potentially improve, grow, where you're doing well, and some additional tips to help you continue to reach your financial goals. I'll include a link below the video. And if you click on that link, it will take you to my calendar where you can schedule 30 minutes to meet with me for free. Thanks so much for watching and good luck.